welcome back to another episode of Vancouver Real. My name is Andy Zaremba, and I am flying solo behind the helm today as Mike couldn't make it. He's on baby duty. So thanks for joining us today. And as usual, we're recording out of our business downtown in Gastown called Float House. And if you have no idea what Float House is, check out the website, floathouse.ca, and you can learn everything that, all the benefits that flotation therapy has to offer. Also, if you're on YouTube, there's a really good video called What is Floating? If you just type in that What is Floating video, it gives a short 7-minute synopsis of all the benefits and everything you can experience while in a flotation tank. And I find it quite optimal to jump in there like once a week, this time of year especially when you're really busy in the holiday season, can't really get out of town. I find for an urban environment, it's a great way to just decompress a little bit, especially if you're really busy and running around and you're stressed out from the holidays maybe. It's a great way to decompress. So if you'd like to give flotation therapy a try, you can use the promo code VancouverReal, and that will save you 20% on a single float. And lately, I've been offered the role of area director for Man Talks Vancouver, and I've been running the Man Talks events here for Connor Beaton locally because he's moved to New York. And we just had an event last night. It was incredible. It's called Overcoming Adversity. We had about 100 people show up. It was an amazing atmosphere, and they're always great. I'm always blown away by the caliber of people that show up to these events. And there's a lot of reasons why people show up. They show up for the speakers, but they also show up to be part of the scene and to mingle and to network. And there's definitely a lot of opportunity for that as well. And our next event is going to be on January 16th, which is a Wednesday. Normally we do them on a Monday, but this one will be on a Wednesday. And if you'd like to stay up to date on that, go to mantalks.com, and we'll be posting the event up there within about a week or so. And of course, give a shout out to the Vancouver Real community. We do Vancouver Real monthly events basically, and they're always free. So if you'd like to get connected with that and stay up to date on future events, visit the Vancouver Real community page. And lastly, I'd like to talk about Mindful Mass, which is the meditation group that we run. And we have another page called Vancouver Flash Mob Meditation, and it's on Facebook as well, and that's where we also create those events and post them up. So if you'd like to get connected with us in any way, those are all the platforms that we offer. And myself, I'm on Instagram as just at Andy Zaremba. So, and also, if you know anybody that would be a good guest for the podcast locally or abroad, please send me your recommendations. You can send me an email at andy@floathouse.ca if you know somebody who would be a great guest for the show. We're always looking for talent, or even for Man Talk speakers as well. And you can reach me at the same email address. So today, I'm really excited for our guest. You actually popped up on my YouTube feed about, I don't know, a month and a half ago, but you've been at it for a while now with your own YouTube channel. And we have on the podcast Steve Saretsky, and you are from VancouverCityGuide.com, and you're a local realtor, but you also have a YouTube channel called the Saretsky Report, right?
Yeah.
So welcome to Vancouver Real.
Yeah, thanks for having me on. Looking forward to it.
Yeah, definitely. I think this is a great opportunity to talk about some things that we generally don't talk about too much on the podcast. We're very big on personal development, maybe entrepreneurship, health and wellness, that sort of thing, but we generally don't dive too much into real estate and finance. And we were talking about before this on the podcast about how you've made yourself into essentially an authority in this area locally. And I think it's great. I think what you're doing, and one thing that really popped out on your website is that it says you've been lauded as a disruptor in the real estate industry. Why would you be lauded as a disruptor?
I think I'm a little bit maybe unconventional, maybe even a little bit contrarian in terms of my viewpoints in the market. But I think it's, I'm a big self-development guy, so nice. I can appreciate that. But I think ultimately, it's really about giving back to people, and I try not to get too much into real estate jargon, but I think a lot of the stuff that I put out is geared towards financial education, a really deep understanding of the real estate market, and hopefully that provides value to people in some way, and they can take that to really make the best decisions possible. Right.
I was listening to I think your latest episode, or at least the one before that, where you were at some sort of soiree with real estate people who seem to know what they're talking about in the business, and you didn't necessarily agree with their analysis of what's actually going on right now. And I think people appreciate that. People, because when you're in the industry of anything, there's going to be maybe biased opinions, right? And it seems like you're not afraid to say the thing that might be a little bit unpopular to say sometimes.
Yeah, I think like when you're in like an industry, like a lot of the time it's kind of like an echo chamber where it's the same thoughts, it's the same everything, right? So, but I think in order to sort of set yourself apart, sometimes you have to think a little bit different. And how can you maybe look at other industries and apply maybe what's happening in another industry to your industry, and just try to do it in a way that's slightly different.
Right.
So I think I've always sort of questioned the norm, I guess, and so maybe that's upsets a few people here and there, but I think it does provide a different light. And real estate it's an industry where there's a lot of money involved and there's a lot of interest involved. And so, people don't necessarily like it when you go against the grain, but
right.
I mean, again, that's just kind of who I am.
Well, I think it gives you a little more credibility. If like you say, you're data driven, which is like, well, the numbers generally don't lie. I mean, you could interpret numbers in a number of different ways, obviously. However, it seems like you tell it pretty straight. And when I really enjoy listening to your little episodes. They're typically short little bursts, like 10, 15 minutes long. And you really get down to the point and you just say, this is what's happening. This is what I'm observing. This is what I think could happen. And I feel like you do give quite an honest opinion of what's going on locally and around Canada and in even bigger global markets even.
Yeah, exactly. I think like Vancouver is definitely a global city, but I think people don't appreciate how intertwined all these global markets have become. And so whether again like you're looking at real estate in the States or in Vancouver, a lot of them are all correlated, so you kind of have to watch and see what's happening around the world. And I think this goes from people that are generally in self-improvement are generally guys that care about sort of their finances and their well-being and setting themselves up for a good life. So
totally,
I feel like that kind of hopefully intertwines a little bit in terms of providing value. And
yeah, well, that's one thing that's like, eventually you can go down the personal development route and self-help route as much as you want, but you can't get away from the fact that, our economy and our life runs on money and we need to make that. And real estate's definitely a way that people can do that through. However, it's like, unless you have your finger on the pulse of what's really going on, it's quite complicated. That's where it's like people come to, let's say, authorities like you on the subject, and they're like, this guy seems credible. He's made some predictions that seem to be coming true, and I can listen to you. And you become like that bottleneck of information for people where it's like, I don't have to go and like sort through all this data because you've done that for me, which is like super convenient. And I'm sure that's why, your YouTube channel is doing quite well.
Yeah, I mean, I personally do that for other industries, just trying to find like a source in some sort of aspect that is, basically doing like a lot of the homework for you, because you can't go through and become like an expert in every single subject and sift through all this information and data.
Totally.
You pretty much have to find like, okay, do I align with like maybe this person's views? Do I agree with them? Are they somewhat credible here? Like, can I trust what they're saying? And then, so for me, that's been like a huge learning. And so I hopefully, people get the same sort of thing.
I'm sure they will.
Back on the Vancouver side, so.
For sure. One thing I really wanted to dive into today, and we're a little bit behind with this, and I've been wanting to get an expert on for a while to talk about the housing crisis in Vancouver, which was a little bit hotter to talk about last year as we were discussing. But I've heard contrary views on what's happening, and some people are like, well, there are pros and cons to what's happening locally in Vancouver. A lot of people don't like it, but some people say there is actually benefit to it as well. And I feel like you could potentially shed some light on that and give a fairly balanced perspective on like what's actually happening. And maybe we could start by giving a bit of history as to how the crisis came about, and then what's developed along the way and where we are now.
Yeah, so I think it's important, like first off, I guess, to give the quick general overview context of the Vancouver real estate market, and so hopefully people can understand sort of maybe some of my viewpoints and where things are coming from. We've pretty much been in a real estate bull market for 20 years. So basically, if you bought any sort of real estate in Vancouver, it almost didn't really matter what it was or where it was, you've done probably incredibly well. So there's really like a multitude of reasons for that. I mean, we can kind of go through like a list, but in the grand scheme of things, like you've had basically interest rates, which is essentially the cost of borrowing, have continued to decline, where over the last decade they've reached historical lows. And so that's allowed you to basically increase the price of a home, because what people buy when they buy a home is they're buying a payment. They're buying a mortgage payment. And so if you continuously lower your interest rate, then that basically allows you to purchase a more and more expensive of a home. So we had that. We had basically a 9-month small dip when all these real estate markets in 2008 imploded. Canada and Vancouver, for that matter, were pretty much unscathed. We went through about a 9-month correction, maybe 10%, 12%. And there was a lot of reasons for that, but to make things simple, is basically the government basically implemented policies to encourage people to continue borrowing, and they basically helped the banks to continue to lend. So they basically took a lot of the bad mortgage debt off their books and allowed them to continue lending. So we basically never had a real meaningful correction. Fast forward to more today. Again, we've had historically low interest rates. We've had basically what's happened in China is they went through this massive credit expansion. They basically, their central bank just printed all this money, and it all had to go somewhere. And so what happened was basically in 2015, early 2016, that money really flowed out into global property markets looking for a safe haven.
And that happened worldwide, right?
Yeah, it happened worldwide.
Yeah.
I mean, you can go look at Sydney, Australia, Melbourne, Manhattan, UK, London, and Vancouver was one of them. Obviously, Seattle is right up there.
So they were all just real estate bubbles. Like you'd hear about how crazy the real estate is in New York or in London or somewhere else. And Vancouver was lumped into those cities as well, right? So the same thing happened in those cities?
Yeah, exactly. And I feel like if you're looking at it from like an outside perspective, if you're, say, from China, and you have this money that you want to protect from basically a communist government, like where would you put it? You're basically going to look for like a store of value. So you're not going to go put it in like Saskatchewan real estate. Like you're gonna go into Vancouver, Toronto, or Seattle or whatever, right? One of these nice global property markets, and so that's really what happened. Basically, we started getting a huge flood out of that money into Vancouver, and because of the low rates that we had here, and because the mindset has been, well, prices really in Vancouver have pretty much only gone up, it basically also allowed locals to try to keep up with that money.
Right.
And so we had basically like locals sort of competing with this like flood of foreign money coming in, and it just drive prices up. And really, ultimately, there's a psychological thing behind it where higher prices beget higher prices. It's basically like a positive feedback loop, right? I mean, if you're at a water cooler talking about, hey, I just bought a home and I'm already up 20%, it's pretty compelling for the next guy to say, well, hey, I'm missing out. I need to.
Sure. You're going to jump on that bandwagon. Kind of like we saw with Bitcoin last year, right?
100%.
Yeah.
Like, I mean, even myself, I almost got sucked in.
Right.
Like, I'm not saying it's the right investment or the wrong investment, but I was at like 16,000 at the time. And I was like, oh man, this is like.
It looks really good. I mean, there's a lot of hysteria and hype going on around it. And it's one of those things where it's like almost. Your gut's almost telling you, like, this is too good to be true, right? Yeah. And then, of course, it was.
But then there's always, like, and you look in Vancouver, there's, like, it's the compelling story that, like, draws people in. So, like, there's a compelling story for Bitcoin. And it's like, this is, like, the new currency. It's going to replace, like, the U.S. dollar. Yeah, it's going to replace the fiat currency. It's the way of the future, da-da-da-da-da.
And it might be. That's the thing.
Yeah, and it could very well be, but it was obviously, like, it just got to a point where, like, okay, this is clearly not sustainable.
Yeah.
Like, people are literally...
When you see the chart do this, like, a vertical spike, essentially.
Well, when you hear stories like people, like, quitting their job to become, like, Bitcoin miners / overnight multi-millionaires, it's kind of like, well,
yeah. And I just heard stories about people putting like their entire life savings into that. And anyways, we don't have to go into Bitcoin too much right now, but so real estate got really expensive in Vancouver, and it became somewhat harder for people locally to buy it. And is that the essence of the real estate crisis in Vancouver then?
Yeah, so basically we've kind of reached a point where housing has become extremely unaffordable, to the point where it creates a lot of basically social unrest. There's basically this social divide where, hey, if you own real estate and maybe you've owned it for a number of years, you're kind of like, okay, well, I don't really care. Like, don't crush my equity. This is my retirement. And then if you're kind of like, if you're renting or if you're like, millennial coming up, you're kind of like, you feel like you got the short end of the straw.
Right.
And so it's really created this, you can sense it, like this created this like social divide. And I think that's part of the reason why like the NDP got in.
Right.
After 16 years of Liberal government. I think like at our elections here in Vancouver, I think Kennedy Stewart was, very aggressive in his housing policies. And so you can see like people are basically voting with that.
It was the number one like factor.
Yeah.
I would say. Yeah.
It's the number one topic. Like everyone's talking about it. Like the cost of living is going up exponentially. Like shelter is becoming increasingly unaffordable. It feels like my wages aren't keeping up.
Yeah.
We're basically in this housing crisis. And so what we've seen now is I'm sure people are aware of, we have essentially all levels of government and Canadian regulators coming in and basically targeting real estate, which is kind of unprecedented because if you think about it, over the last really 20 years, governments and policy advisors have actually been very supportive of real estate. They've tried to actually encourage real estate growth.
Right. Now, is that like a political move by them, or is that because they're actually trying to prevent something bad from happening?
I think
a little bit of both, maybe.
Yeah, I think they're aware that it's reached a point where they can't really get households to borrow a whole lot more to drive growth and through spending. So you can keep borrowing money, you can keep inflating asset prices, and you keep borrowing off that asset price, right? So it's kind of like it creates a wealth effect. And so they kind of know that. I think they know that it's reaching that point, and they know that they can't keep interest rates where they are. They have to move them up. And so they know that it's going to create some instability. And then so I think they're putting in these policies in place. And that's from like the Canadian regulator side point. And I think from a provincial government standpoint is they know that, they're trying to get elected, and to win votes, they need to target the most controversial, hotly debated issue, and that is housing. And so like the NDP basically came out and said, we want lower home prices. That's pretty much unprecedented for government to come out and say. Right.
So what are some of the new policies that they've put in place to help balance that out then?
So, I mean, from a provincial standpoint, in 2016, there's an array of things, but they brought in like shadow flipping, which is basically like you can't continuously flip the same house. It was basically a scheme that was going on. I'm not going to get.
Can you explain that?
Yeah,
I'm actually curious what that is.
So what was happening was basically I would say that the top. This probably marked the top of the real estate market. What was happening was people were going in and buying a house on the west side of Vancouver. Let's call it for $4 million. Before that, so they'd have a firm contract in place for $4 million. Before it actually closes, which means before you actually pay all your money and the title transfers to the new owner, what they would actually do is they would flip that paper contract to a new buyer for say $4.5 million. And so they would have basically a $500,000 profit or whatever the number is without actually having to put any money into the deal.
Wow.
And so basically, and like the realtors were sort of helping coordinate that. And so then the realtors would get like 2 commissions out of it.
Wow. I guess there was a whole spectrum of, say, realtors that were involved with that, or ones that were like maybe aiding it more than they should have and that sort of thing, or like...
Yeah, I mean, it was in the news. The Globe and Mail wrote a big long piece about it, and the managing broker was caught in a recorded conference basically saying how they were trying to flip properties as quickly as possible, and so that got so much public backlash because it was in the Globe and Mail. So the Christy Clark brought in this thing to basically curb, say, no more shadow flipping of homes. So they brought that in. Then they brought the 15% foreign buyers tax. They've then increased it. They've then increased the property transfer taxes on luxury homes. They've increased the foreign buyers tax now to 20% and expanded it across basically province-wide. And now in January, they're bringing in a speculation tax, which is basically...
Right. And that's 2%.
2%. Right? So if you're a foreigner, say you're American or from China, whatever the case is, you own a home here, but it's not your primary residence. You're not paying BC income taxes. You're basically just using it maybe a couple months in the summer. you're gonna have to pay 2% tax on the assessed value,
which is
year.
pretty significant for those type of homes.
Yeah, it's huge because, again, you can rent it out for 6 months and you'll be exempt because they're trying to encourage, get the vacancy rate up. But what's likely is going to happen from what I'm seeing feet on the ground is a lot of these people have very nice homes, $2, $3, $4, $5 million homes that they don't really want to rent out, specifically for like the little amount of rent that they're going to get.
Yeah.
And so they would probably rather just sell it, and then they don't really want to do the taxes because they got now they have to open up their tax books to the Canadian government. That's probably for some people that's not what they want to do.
Right. Okay, so we have a bunch of houses now that are like they're probably too high for what they're worth, right? And what's going to happen now when we have like all of these new policies in place? What do you predict will happen? Because you also said if you watch your videos on YouTube, there's plenty of, you do lots of explanation as to like where we're currently at, and from what I understand is like the detached homes are basically not selling and they're actually falling in value. Is that correct?
Yeah, so you pretty much have, like right now, you pretty much have property values declining across every segment. So whether you own $4 or $5 million home on the west side, or you have a 1-bedroom condo in Surrey, they're pretty much all declining right now, just at different paces. So single family market's pretty much been correcting, or basically has been peaked out about 2 years ago.
Right.
And so you have like sales are at like 10-year lows. Wow. And then it's slowly trickled into the condo market.
Okay.
And so basically the condo market peaked out this year in about February, March. And since then it's been noticeably going lower. So we have condo sales at a 6-year low. You have inventory now increasing. So it's that, supply and demand, right? Like before in the boom, we had rising sales and falling inventory. Now we have falling sales and rising inventory. So that's naturally going to push prices
down.
Lower. Yeah.
Right. And I guess where are we at now, like compared to say like a year ago?
People, I'm sure different realtors and market commentators might have different numbers and thoughts on the markets, but like your typical detached house, like in the city of Vancouver, I would say from sort of its peak price to what it's actually selling for today, not what they're listing them for, are selling for about 20% off their peak price. And then you have condos, I would say, are down about 5%, maybe 7% on the high side.
Okay.
If it's a 2-bedroom, it's probably down 7%. If it's a 1-bedroom, it's probably down about 5%.
Okay, and what do you think is going to happen with all this? So there's like again, like it can become like a positive feedback loop in the downward direction, right? Do you have any idea where the bottom is with this, or is that even possible to predict?
Yeah, I mean, it's like I've been pretty vocal on like not making predictions, just because like that's not really like my mindset or mentality. Like I just don't think, even if you study like a lot of the financial greats of their time, like they never really try to predict, but you always try to figure out like, okay, where are we today and what's like my risk versus my reward sort of thing.
Right.
And so I think a big thing to understand is like what causes home prices to rise. So you hear a lot in the media, it's like, oh, we'll just have this shortage of homes, just not enough homes. But if you look in like any like real estate like price boom, like it's always the same arguments, but like little is talked about is like you have to have mortgage credit growing in order to support home prices. So basically, like if your income's not really going up and your house prices is rising 20% a year, the only way to basically afford it is to take on essentially more leverage. And so the banks have to be there to lend to you. And basically banks work as a business, right? So when real estate's going up, they look at it as like, hey, this is profitable.
Right.
Market seems like it's just going to keep going up forever. They think like anybody else, so they'd lend. And then conversely, when the markets start going down, the banks get a little bit tighter.
Yeah.
And so it's that old adage that, a banker will give you an umbrella on a sunny day and they'll take it away from you when it's raining. Mm-hmm. And so I think one of the most important policies with that in mind is the Canadian regulators brought in what's called a stress test, which effectively reduces your ability to borrow by 20%. So like naturally, you just reduced everybody's borrowing power by 20%.
Right.
So right off the hop, you would think, well, prices should fall 20%. I'm not saying that's going to happen, but I think it's certainly a realistic scenario.
So that could happen.
It could happen, yeah.
Okay.
I mean, you could say like detached is already down 20.
Right.
So, condos are down 5, and then, everyone's trying to quantify like what are prices. You can look at the average price or the median or the benchmark. They'll all tell you something slightly different.
Right.
But the reality of it is not to confuse everyone. It's about,
and that trickles down to like the 2 bedrooms and smaller condos as well, and that would be considered like the correction that's potentially happening right now.
Yeah, exactly. So I think in order for someone to like call a 20% correction, they would probably have to have someone would probably have to say the benchmark, the MLS benchmark, which is basically like a smoothed out index, which I think is very much a lagging indicator. They'll have to say that's down 20% in order to officially call a 20% correction, but realistically, if you look at comparable sales and like homes that maybe were bought in 2016 and that are now on the market and trying to resell that exact same house is selling for 20% lower.
Right. Yeah.
So
then I guess in this scenario, the losers, for lack of a better way of saying it, are the ones who currently already own, and the winners are people who are potentially able to buy. So, does that open up, because the prices are dropping, do you think more people will actually be able to get into it, or will that stress test now limit people's ability to buy as well? So, and does that sort of snowball? Does it balance each other out? Like, what do you think about that?
I mean, you're basically reaching a point now where they say that housing has become even more technically unaffordable because of the stress test and because interest rates have moved up, that you're actually borrowing at a higher cost. So it's like you can buy less home essentially, right? But I think to simplify it, I think that only works to a certain magnitude. Ultimately, when housing slows down, it's going to have its ripple effects unfortunately through the economy, right? So you're going to have a wealth effect start to dissipate. People won't be able to tap into
a wealth effect.
Yeah, there's basically like a wealth effect. So it's like a psychological thing. Someone can Google it. There's a lot of studies done on it. But basically, as your home or your assets, they say that real estate is the most significant wealth effect. Like stocks, not so much. But like when your home rises in value, you generally feel wealthier. Like, hey, I don't mind going out to the restaurant tonight and spending.
Okay, so people tighten their belts a little bit.
Yeah, it's like my house just went up $100,000 last year. Like,
so they feel like they have more when maybe they haven't increased their income.
Yeah, exactly. And also, when your house goes up as much as it does, like it has, you can tap into that equity. You can either refinance your property, you can use a home equity line of credit, and that's what people have been doing. Not everybody.
How much is that going on, right? Or has gone on, maybe?
I think home equity lines of credit make up, I think, 13 or 14% of Canadian GDP.
Right.
Which is, I think in the U.S. the highest it reached was 5%.
Okay. And what are the risks when people start doing that sort of thing?
There's a lot of risks because, ultimately your home is, it's only worth what you can actually sell it for. So it might be worth $5 million today on paper, but if you sell it in a year at $4 million, then it's $4 million. So I think people have basically used these home equity lines of credits, et cetera, to fund their lifestyle. Whether it's I want to go get a new car, I want to go on vacation, and so. Do
you think that's where a lot of wealth in Vancouver comes from? Because it seems to me like people who have like maybe been born and raised in Vancouver. Like a lot of people have benefited from this, like what you said, like this 20-year run, basically. And you see, sometimes you wonder, like, how do these people do it, right? You see them driving like these really expensive cars, and you're like, what's going on here? But you think a lot of it could be just like from borrowing.
Yeah, I think a lot of it is boring. Because again, you try to I don't want to just say, hey, this is my anecdote. Like you can look at Canadian household indebtedness. We're the most indebted in the G7. I think we're second of the G20. So we're one of the most basically indebted countries in the world.
Right.
So you can't deny that households haven't been borrowing. They clearly have. But it's just been great to a point because what's happened is basically we keep piling on the debt, But in able to service that debt, we've been able to continuously lower interest rates. So we've been able to keep what's called a debt service payment relatively flat over the last 5 or 6 years. But again, now we're reaching a point where it's like, hey, you just had interest rates almost basically hit zero. You can't really go any lower. Now we're starting to get some inflation, labor tightness. We have to hike interest rates. And so your debt servicing payment is now starting to rise. And that's what starts to impact Canadian households.
In which way?
Like their debt, basically their interest payments are now rising.
Right.
So they're using more and more of their essentially income or their disposable income towards servicing non-productive interest payments.
Okay. All right.
Like you to pay more and more of your income towards an interest payment is not productive for the economy.
No.
Like that doesn't help anybody.
Right. So yeah, you're not going out to eat as much. You're not spending on entertainment or buying as many things. Now you're focusing on just paying down your interest in your debt.
Yeah, exactly. So there's a brilliant like hedge fund manager, Ray Dalio, has written a couple books.
Right. You mentioned him on your last.
Yeah, I read a lot of his books. So like
Yeah.
a lot of like what I'm talking about is a lot of sort of what he references and he's written papers on. But basically like one person's income. One person's spending is another person's income. That's how he essentially simplifies it. So basically, if your spending starts to decline, like you're ultimately impacting someone else's income.
And on one of your videos, I heard you mention that auto sales are declining as well.
Yeah.
And are these all these things correlated then with like, and is it like are they signs of an economy that's slowing down?
Yeah, this is basically like all of the signs are there, and it's just like, okay, you can just try to interpret them. So basically what's happened is like this is not just a Canadian thing. It's happening in the US and in China. But you have basically home sales across all these countries starting to decline. Like they peaked out about a year and a half ago, and they were starting to decline. And it's the same thing with auto sales. Those peaked, I think, last year, and throughout this year they've been declining because when you have interest rates going up, those are two very expensive items, and so they're very sensitive to interest rates.
Yeah.
People when they buy houses and they buy cars, a lot of the times what they're buying is a payment.
Yeah.
So they're like, hey, I can afford. Yeah. So that's pretty much.
Okay. So, all right. So we're seeing like this decline. Let's say, what would be the worst case scenario? Like literally, if a realistic worst case scenario.
Yeah.
You don't like to make predictions necessarily, but it's like what is possible? Where could it go?
I mean, I think the realistic scenario is like study financial history, and that will give you like. It's hard because everybody that lives in Vancouver wants to believe that it's Vancouver. And like I grew up here, like I love the city. I think it's always going to be a great real estate market, great investment. It's always going to be very expensive because it is a nice global city. But that's not to say like, what's happened throughout history, whether it was like we had I think we had a 30-40% drop in the 80s.
Right.
It's happened in Spain. It's happened in the US. It's happened in Manhattan. I think Manhattan had a 30% drawdown in 08. I mean, we like to compare Vancouver to Manhattan all the time.
Right.
And I'm not saying they're similar, but if people want to make that comparison, then we also have to be able to say, okay, well, I'm not saying that's a likely situation, but yeah. I think if you've had 30 to 40% drawdowns in a whole ton of real estate markets over time, then it's not unrealistic to say. You can't say, hey, this will never, ever, ever happen in Vancouver.
Are you talking about like just a big collapse, essentially? Or
yeah,
like a recession? Like what do you
I mean, I think inevitably that it's not recessions that cause housing to slow down. It's housing causes the recession.
Right, yes.
And so if you look at like Vancouver, like let's take BC for an example, like real estate and construction, like that's pretty much our main industry here. Like Alberta is kind of like oil and gas. Like here, like we build homes.
Right.
We build things. Like I think it's, if you take the finance, insurance, and real estate sector, it makes up I think about 24% of GDP. I think construction is something around 15 or 16% of that.
Yeah.
So it's a huge sector, right? So if you have like a housing slowdown in terms of like what happens generally is over the last couple of years, we've had a record number of housing starts and housing under construction. So we've had this record. We've never built this many homes before. When, and it's inevitable that will slow down, we're starting to see it. It peaked out in about March. When that starts to slow down, there's just going to be less work out there, right? So maybe the person that moved here from Calgary for a construction job, maybe they move back.
Right.
I'm not saying that's inevitable, but generally what happens is when housing slows down, the developers will slow down their new construction, and that tends to weigh on jobs.
Right. So jobs decrease, people move out. There's less spending in general. So these are sort of like all like recession, symptoms or byproducts, right?
Yeah, they're all happening. Like everything is like correlated. So it's you have to try to like figure out like what causes what.
Yes.
And so like people are talking about in Vancouver, I hear this a lot, is we have this really strong population growth. There's so many people moving here right now.
Right.
But part of that reason is because we have a strong economy. And we have a strong economy because real estate is very strong.
Right.
And so you had really high asset prices, so people feel wealthy, they're out there spending, everybody's making, and pretty much everyone is, like, even if you don't own real estate, like your wage growth in BC is up like 6%.
Right.
Which leads the country. So
is that because of minimum wage increase, or is that just because
I mean, you can factor it in there, but I mean Ontario had a wage increase too as well, right? So yeah, I mean our, like we have pretty much, I think like we have one of the like lowest unemployments too in Canada. I think we have the lowest unemployment.
Right.
So yeah, you basically have like a strong economy attracts people. Like I have friends here that moved from Calgary for work, and you see like in coffee shops people on temporary work visas. And so yeah, the strong economy is what basically pulls in the population growth.
Gotcha.
And it's like sort of the vice versa. So when housing slows and the economy slows, then all of a sudden it's the job prospects aren't as great, and then people start to leave. And so you can actually see this. Like this isn't just me saying things. If you actually go back and look, and I've posted this in some of my videos, you can actually go back and look at non-permanent resident as a portion of the workforce. And you can see it actually spiked. The last time it was this high was actually in the 1980s. And that was, of course, just before we had our housing downturn.
Right.
And again, I'm not saying that's...
But you're seeing signs of what might be coming.
Yeah. I'm not saying this is inevitable and like everyone should like run for the hills and go grab a can of beans. But it's just, I think it's more prudent to not put your head in the sand and just say, hey, like...
And do you think that this is not getting the attention that it should be getting, or maybe being downplayed in
I think it's downplayed a little bit, because I mean, like, truthfully, I don't think many people want to hear that it's likely not going to be as prosperous. Like, we've had a pretty good economy for the last 10 years.
Right. And you think that it's heading the other way for now.
Yeah.
And I guess if that is the case, then what happens next? So we go through this like flattening or like depression, and then how long do these things last before they generally start turning around? And what are the signs that people can look for when they're turning around?
I mean, that's a good one. I don't think anybody really knows. It kind of just depends on, how much government can intervene, and like really the big one is like central banks, right? So what they'll do is they'll cut interest rates. So normally, in a recession, I believe it's either 4 or 5%, one of the two. But generally, in a recession, central banks will cut the interest rate between 4 to 5%. So this basically allows them some room to cut rates, to try to stimulate growth, to basically try to encourage people to continue to borrow money.
So that'll happen after, because you said they're lowering.
Yeah, so
they're raising the rates now.
They're raising the rates right now.
Yeah,
and I think they're going to continue. I just don't think they're going to get as far as everybody thinks they are. So they're right now, Bank of Canada is at 1.75%.
Right. Like
they're forecasting another four rate hikes by the end of 2019. So that'll bring you to basically like 2.5, 2.75. I don't think they'll get that far before they have to sort of hit pause, just because you're seeing so much slowdown in the Canadian economy.
Gotcha.
But then again, I'm not saying they're going to cut rates in 2019, but they might hit pause, and then who knows, they could be cutting end of 2019. That's like impossible to know, but basically, yeah. But it is worrisome because the Bank of Canada is basically only at 1.75, so they get to 2.5 even.
Right.
There's not a whole lot of room to cut before you hit 0.
Yeah.
So if you normally are cutting between 4 to 5, and now you're only going to be able to cut a maximum of 2.5, that makes it harder to get out of that.
Okay. So we could be heading in that direction. We're not 100% guaranteed, but like there's signs pointing that way right now. Let's say we know this, and who can, how do you benefit? How do you operate in a market like that? Like there must be something you can do to weather the storm, or maybe can you even benefit in a down market?
Yeah, I mean, again, like going back to sort of self-help, it's really all about mindset.
Really?
So, people say, like, some people, like a lot of people agree with me, and a lot of people that don't, is they, oh, you're just so negative, you're so pessimistic on the market. I'm just trying to be real.
Yeah,
and
well, that's what I gather from you. Like,
right.
I mean, like, I don't necessarily say this as it's like this is all doom and gloom. I just think I'm like, okay, this is what's happening. So then, well, what do we do from here?
Yeah, so you can either kind of accept it, or you can try to say, okay, I don't really want to hear that. That's kind of makes me feel bad. I'd rather just not know.
Yeah.
And so you can kind of just, bury your head in the sand, or you can say, okay, listen, it's not going to happen for sure, but this is a likely scenario. Clearly things are slowing down. If it does come to fruition, how can I benefit out of this? How can I actually get better? So I think there's going to be potentially some really good opportunities.
What are opportunities when something like that does happen?
I mean, if you do get a real estate correction,
well, more people can potentially buy something.
Yeah, if you have
right?
cash, if you have a solid income, maybe you're in a business that's less impacted by, say, a recession,
right?
And you're just like,
you're sort of humming along while things go down.
Yeah, maybe you're
so if you're like, gotcha.
Like you could be a hustler and be like, hey, like my income is actually growing in this recession,
right?
Because I'm like my business is flourishing.
Yeah, right.
That's a great position to be in. Is all of a sudden like,
and there are some businesses that are more recession proof than others because of like just what they're offering, right? They have like smaller products, like things that are $4 or $5 are going to do better in a place when when things are down, because people can still afford those things generally.
Exactly. It's like the big ticket items like real estate and like cars,
right,
that you generally don't buy unless like you have money and you're feeling wealthy.
Right.
Like not many people. That's why there's like the people always like, oh well, like if Vancouver prices drop, there's so many people on the sidelines, everyone's just going to buy. But like, it's like a psychological thing.
Where do they get the money to buy from, though?
That's the thing. So like someone like a spouse could get laid off. They could go from full-time to part-time.
Yeah.
And ultimately a lot of it is psychological, right? Like people get scared. People get nervous. Like maybe it goes lower. So like I don't want to, like it's down 20, but what if it goes to 25? But I think like if you sort of set, like if you can determine what you think it's worth, like what's the value? Just like to me, like if this condo hits 500,000, like I would be a buyer. Well, if it hits 500, then buy it.
Right. So you really have to look at your own personal finances at that point and make a decision on what you can handle, what you realistically think you can handle. That way, it is still safe for you to buy that condo.
Yeah, exactly. Like you could, there's going to be, again, like going back to opportunities, like there's going to be less buyers and the asset prices will be lower. So that's a great opportunity for somebody that is ready and says, okay, I've been waiting for this. I've saved up a bunch of cash because
ready means saving money for.
Yeah,
right?
I thought this might be coming. I've been saving cash.
Yeah.
I've been working really hard. Right. And so that's a great opportunity for somebody.
Right. How many people do you think are actually in that position? I mean, I guess
very few.
I was going to say, because everyone's borrowing, right, to buy luxury items or whatever they're spending their money on.
Yeah.
I mean, most likely they don't have that sitting around generally.
Yeah, and I didn't think. I mean, the reality of it is like it's like sad to say, but like it's generally like the wealthier people in like a downturn actually end up sort of prospering more because they're the ones that have like the money. Like you have,
because they do have money banked away.
They have banked money, so they see an asset on sale for 20-30%. They go, I can go buy. Whereas like someone that's like someone that's
there at that point.
Yeah, that's like lower class. Like that's gonna be tough.
Right.
So like and then that sort of creates like kind of truthfully kind of widens that wealth gap a bit, right?
Right. So I mean I don't see you as being overly pessimistic. I feel like you do give a pretty balanced approach. But if you were to be more optimistic, what do you think like some potential directions or outcomes of this could be?
I mean, it's possible that we somehow are like, Goldilocks economy where, maybe sales rebound next year and they go back up. I think China's another wild card where like you just like whatever is like China is like nobody even knows because the data is so obscure there.
Right.
Like they could just create a whole bunch more money next year. Like they're trying to basically deleverage their economy, which is like slow it down and reduce the credit. But like they could just pump that into overdrive next year. Maybe a bunch of more money floods out.
Right, and then you get another spike.
And you get another spike. I think that's highly unlikely, but
I
mean, it's not to say it's impossible.
Okay.
Yeah.
All right. What advice would you give to people then at this point? If I guess it depends on person to person, like we kind of just said. It's like, well, it depends on your own personal situation if you're going to buy like a property or you're not. But I mean, like, again, what are some other tools people could potentially use to help weather this storm?
I think the biggest thing, like, and then don't like a lot of my clients are still like buyers that I'm working with. It's just being educated and knowing where we are. So I would say, like, if you're going to buy a place, just understand that like the prices are likely to fluctuate. And so make sure that you can afford the payment.
So it's going to be a volatile market.
It's going to be volatile, right? Like you can't expect. So what I saw over the last couple of years is people buying places that they didn't really like and just saying, well, I'm going to buy this 1-bedroom condo and then like in a couple of years I'm going to sell it for a profit and then buy like the townhouse that I really want to live in because this place is way too small, but I just need to get in the market. Well, if you do that and say the prices drop, let's say they drop 20%. Well, now all of a sudden
you're stuck with something you don't really want.
Yeah, you're stuck.
Yeah.
Your equity's gone, and you have to wait for it to come back up. It will come back up, but it's going to take time. So you're going to be basically stuck there.
Right. So none of this is going to, like, from an outsider perspective looking in, it's like, for someone who doesn't really know, I might think that, oh, well, if real estate prices are going to fall, then maybe people who normally couldn't afford it now can afford it. But you say that's generally not the case because you think it's going to create a potential bigger wealth gap.
I think there will be people that are ready. Maybe they're in good jobs.
Yeah.
Like stable jobs, right? Like maybe it's like, I don't know, maybe you're a doctor. Like
right, and you have that stable income. And
you have a stable income,
right.
I don't know, like I'm trying to think. Or maybe you work for the government. Like government jobs are very resilient. Like there's very few like they lay off government workers. Like so like maybe you work for the city and your job is secure, your income is not going to change. It's a great market for you.
Okay. What's really on your mind like right now? Like what are some of the big things that you've been thinking about, maybe related to real estate or not, or just things that are going on in your world that are really important to you at this point?
Just looking, I think, for opportunities. Really like sort of trying to build like that network.
What do you mean by network?
In terms of like everything that I do from like from the YouTube videos and the blog and stuff.
Oh, from like your people network.
Yeah, right. People networks. It's like always it's just about like it's ultimately about providing as much value while also like by doing that I'm growing like my own equity in the space.
Yes.
And so I'm able to basically now, fortunately, like it opens a lot of doors.
Yeah.
Which is nice because I think that, as I talked about, I think there are opportunities that are gonna surface in the next couple of years because we are going through this transition.
Yes.
And so I'm trying to basically, I just be able to network, and again, like people such as yourself
doing these kind of things, right? Yeah. And I think it's really cool what you're doing as a realtor on YouTube and marketing yourself this way. Like it's like that Gary Vaynerchuk style of like give, and then like potentially you earn a new client because of that.
Yeah.
And I don't think there's a lot of realtors doing what you're doing right now. Like I don't know of any other. Oh, there's this one other guy in Kelowna whose videos keeps popping up, and his name's Mike or something.
Okay.
And he's got like a goatee, and he's way more extreme than you. And like I listen, because like I'll be watching one of your videos, and his will pop up, and I'm like this guy's predicting like doom and gloom, like just fire and brimstone.
This guy is?
Yes.
Oh wow.
Yeah. So he's going. Yeah. He's just more extreme. I'm not exactly sure what he is or what he's doing, but if you search your YouTube videos and
Yeah.
locally, this guy might pop up as well because he did for me, and he's way more extreme than you. But
That's
other
funny.
than that, I don't
Yeah.
really know anybody who's
Well,
doing what you're doing as a realtor, anyways.
Yeah, I mean, I think like again, truthfully, like it's basically like a sales job,
Right.
Like that's pretty much like your role. I try to take it from like a more of an advisory standpoint, but let's just call it what it is. It's basically a sales job, and it's hard to. I think it's hard to push sales if you believe or if you're telling people that prices are going to go lower. And so I think a lot of realtors have that mindset, right? They're like,
well, they kind of have to almost.
yeah, they're like, well, how am I going to get this buyer to go buy if I
if you think that this is what's happening.
if I think like the prices are going to go down, but I just say, hey, listen, well, no one else wants to say it, so I'll say it. Like, I think they're probably going to go lower.
They're going to hate you. The
And-
realtors are just going to be like,
yeah.
shut up. Shut this Saretsky up. Get him off the internet.
Pretty much. It's a love-hate. But, yeah, but I just try to take like the consultative advisory approach.
Yeah.
And I think like
You got to
outside
dance
a
until the
realtor,
music stops, right?
Yeah,
It's like-
exactly. And I think it also creates opportunities. Like, you know what I mean? Like, hopefully you can diversify your income outside of being just a realtor. And so maybe that's partnering up with investments and stuff. But like, how do you attract, say, investment dollars? If I want to go to someone and say, hey, listen, let's go buy a multifamily building in, I don't know, Kelowna. Like, let's pull some money together. Like, how are you going to do that? Like, you have to basically, I think you have to have people's trust.
Mm-hmm.
And so one way I think is to earn that trust is to build a network and to be speaking your truth for, the last, I've been doing it for about 3 years online.
And your channel's doing quite well. Like, you always get really consistent views. Looks really good. Speaking of networking events, like, we're doing Man Talks now. That's a great little networking event in the city. You should come out.
I would love to. I went to a keynote when Gary Vaynerchuk was here.
Oh, okay. You went to the Real Talk Summit.
Yeah.
That was a different thing. That was like his own entity, but it was run by Connor, who started.
Connor
It was
Beaton,
called Real Talk Summit, I think he called it.
And then he spun off, and now it's called Man Talks. Is that
No. So it started off as Man Talks.
Okay.
And Man Talks is basically like it was geared towards men, like talks geared towards men and men issues. And he started it quite organically, actually. And he started off with like 20, 30 people coming out to these events. And then this is probably like 2013, 2014.
Yeah.
And then over like those couple of years, it just kept growing and growing and growing to get like 100 people out, 150, 200 people out. And it kept growing. And then he got to the point where he brought in Gary Vee. And then he moved to New York. And then he wasn't here. So he was coming back like maybe once a quarter and doing events and running it. But he needed somebody locally to take it on. And he thought that I would be a good fit for it. So he put it in my hands for now.
Nice.
And I did my, fourth event last night. And it was great, man. We had like 100 people come out, and like I said, I'm always blown away by the caliber of people who come out to these events. Like, and they come for different reasons. Like, the speakers are one thing. The speakers all have good stories, and they share, and you might get some really nuggets of information from these guys. But it's also about like the networking aspect. That's a big part of it, and it's become a place known for women to meet a high quality man.
Yeah.
Man.
Oh, really?
There's a lot of women.
Yeah.
Surprising.
Yeah.
Like in the audience proportions, like at first it was like 80-20 men women, and now it's like 30-70, and now it's like 40-60, because it's like it has this reputation, because everybody who comes out there, they're all sort of in the personal development space in a way. They're people that are movers and shakers. They're trying to build something for themselves. So it's like they do pride themselves with like integrity and values and that sort of thing, and that's what we do talk about quite a bit in different ways. So it's a great space for people who are looking to build their network. Anyways.
I mean, obviously, like, I think it's like who you surround yourself like is hugely important. And like, again, going back to sort of sometimes the stuff that I write, like, it's a lot of the times it's to actually network
on your blog too, right?
Yeah, it's to network like with people in your industry.
And that's at VancouverCondoGuide.com.
It's a terrible domain.
Oh, sorry, VanCityCondoGuide.com.
Yeah, terrible domain, but
it works.
It's too late
locally.
now.
Yeah, it's there, and people. I mean, I haven't read your blog yet, but I've been watching your videos. But,
and it's the videos pretty much just summarize what I've written, because I know some people prefer just to watch as opposed to read. So I pretty much, the videos are pretty much a summarization of what I'm writing.
Right. You got to do a podcast, man.
I know. You've inspired me. I might have to make the jump now.
Well, it's great. Like, I mean, people like, as convenient as video is, because a lot of people will digest information differently. Some people will read it, but fewer and fewer are going to read it now. Video is great for YouTube and things like that, but it's like podcasts are sort of the ultimate because you can listen to them anywhere. Literally, like you could be doing any other task and have a podcast on in the background, and now it's just like it's so digestible, right?
Yeah, as I told you, I'm a huge podcast guy. So it's like,
what do you listen to generally?
I do listen to a lot of Gary Vaynerchuk. Big in that space.
I like him. Some people don't like him, but I like him.
Yeah, well, he's gotten to the point now where I've like heard everything he's got to say, so it's kind of like repetitive.
Right. It's only only someone who can, be told to stop bitching about your life and go crush it.
Yeah. That's pretty much like if you can summarize it. I don't know. Like I'll listen to like investing in finance podcasts, kind of geek out.
Right. What do you listen to in that space?
There's a big one called it's called Macro Voices. It's basically just like a podcast where they usually interview like some sort of like hedge fund guy like once a week, and they'll basically talk about like what's happening in financial markets.
Right.
And so I don't know, it's kind of interesting because like you think about it, like the entry point to like learn. It's like I can be sitting in the car and I'm basically listening to like a hedge fund guy that 10 years ago would have been like unaccessible to like the average person.
Totally, right?
And so it's like I'm getting all this guy's insights for free.
And you're self-taught most of your stuff, right?
Yeah, I'm like all self-taught.
Amazing.
Yeah.
I mean, and that's the best part about it is people can go and do that now, like really affordably.
Yeah,
like if
it's
through podcasts or it's through audiobooks, there's so many ways to get information now, and there's so much free information out there, right?
It makes sort of like improving like your life and your situation like so much easier.
Well, you can develop new skills,
Yeah.
and it is like there is a whole thing about becoming like an influencer. Like that's kind of what you're doing within your space as well. Yeah. And you are in a sense setting yourself apart from every other realtor that's not doing that. Because guess what? Like the future buyers, like the millennials and below, are on social media platforms.
Yeah.
You know what I mean?
Yeah.
And if you're not, and you're putting out that content now, that's going to get your name recognized. And by the way, if you are giving that balanced approach and people see that like, oh, you're being really honest about it and that they can rely on you as a credible source, when they come around to be ready to buy, they're gonna be like, I'm going to you.
Yeah.
Because it's like you weren't just putting your head in the sand during this problem and you were just telling it like it is. Like you're gonna have way more trust with your audience as well.
Yeah, I can honestly say it's been like extremely powerful. I'd say like YouTube. So I do like a blog. I'm really active on Twitter, which is kind of a dying platform.
Oh God, I can't do Twitter.
I know, but it's like a finance space now. It's kind of weird. You get a lot of like the finance geeks on there, so it seems to be like so.
And people who like to argue about things.
Yeah, it's terrible. I try to stay away from politics because you can't win, man.
You can't win.
You can't win
because if you say one thing on any side, you're gonna have half the people out there hating you.
Well, that's the thing with like these like housing policies. Like they're so controversial. Like a foreign buyer's tax. So it's like I literally have like literally half my clients love it and then half of them hate it. So
what are the reasons they love it and they hate it?
Some people think it's like anti-Semitic or whatever. Like like super closed borders. Like we're like regressing to like the old days.
But then isn't there the argument that they're doing it to protect the housing market?
Yeah, and then you could say, and then the other argument is like, well, that's great. Like these prices are insane. These people are like coming here and not providing to our economy.
Do people think they don't really understand that? Like they think like they'll jump on and criticize it for like being like one perception of that.
Yeah.
But then they don't really realize that it's like it actually could benefit them if housing becomes more affordable here.
Yeah. I think a lot of people have sort of their minds made up and they might not understand like the full extent of the policy, like maybe the implications that they have.
Because it's not so black and white, and I'm sure there's like lots of nuance in there that gets overlooked on Twitter, especially.
Yeah, a lot of nuances. Like, I mean, I don't know. I'm not to get political, but you can see like there's a huge divide between the two policies, and that's again where I think we're coming through this like rich versus poor / like social divide, where there's clearly like people that are doing well, and there's a lot of people that are just like, are we getting left behind? And that's where you have like these now like these. Like a foreign buyer's tax, that would like if honestly like I'm not saying that I'm against it because I think our housing market has reached a point where like clearly like something needed to be done.
Right. Yeah.
Like, especially if you're going to leave interest rates where they are for the last 10 years, like so we got to do something. But then it's like I forget what I was saying with that, but
no, you basically how I'm trying to pick up for you there. How people will have different attitudes around the policies, and how people feel like they're getting left behind.
Yeah.
And some people are benefiting and other groups are not. And we're seeing like a divide. We're seeing a bigger divide between like, I guess, just more inequity, I guess, in that sense.
Yeah.
Right. And how, I guess, what is one way that we can curb that a little bit? Because if you start talking about like, say, inequity, and we talk about like hierarchies and things like that, like, some people say that part of the job of the right of the political right is to like sort of maintain the hierarchy, because we have to have hierarchies in any pursuit that we have, but then the people at the bottom sort of get left behind. And then, it's like you can play with it by increasing the taxes and redistributing some of that. Like, what do you think is some of the solution there? Like, how do we manage the people that feel like they are falling behind?
I think that's that's probably like one of the most pressing things. It's not something I really talk about, because I think a lot of people don't recognize it or even want to talk about it. But like, it's really, I just find it like very interesting to like see kind of what's happening, and like not just to see it like happening in Vancouver, but this is like happening like globally. Is like you have this like rift, and so I think it's reached a point now where like, even if you're like, I'm very much like free market and like capitalist, like, work hard, you should make money, and like that's how I feel. But at the same time, I understand like what we have been operating under, like, to me, it doesn't necessarily feel like capitalism. It feels like kind of like a crony capitalism, where you have like this huge financial collapse in '08,
and then the bailout,
so you basically socialized all the losses, so all the gains were privatized, and all the losses were socialized.
Now, that was in the States. Was that similar in Canada as well?
Similar in Canada. So what people understand is in order to the policy regulators, in order to continue to allow the banks to continue to lend, because they were like freezing up, right? So what the government actually did, I think they did a program through like they bought basically $69 billion worth of mortgages off the Canadian bank's balance sheet. The Canadian government did. Right. So they basically bought a bunch of bad mortgages off their books to allow the banks to continue lending. So that's basically like, you're basically social, like that costs taxpayer. That's taxpayer money.
Right. So they did a similar thing then.
Yeah, they did a similar thing. It was just very discreet, and like nobody really talks about it. But and the same thing, like CMHC, which is our Canadian mortgage insurer, like they securitize and they insure like a huge chunk of mortgages here. What that basically does is it takes the risk of lending away from the banks.
Right.
Because you're insuring the mortgage. So basically, like, if CMHC insures your mortgage, there's no risk to you, the bank, to lend.
And then who pays for that mortgage if
the insurance is, I mean, it's a government, it's a crown corporation, so it's basically funded by the taxpayer.
Okay, so that means that the taxpayers would be like footing the bill for that one.
Yeah, so like CMHC is like well capitalized. So they've done stress tests, but obviously like if you had like a huge panic, like,
are you sort of like, are you not a fan of CMHC then? Like, is that something that like, it's maybe not, if it is sort of like a taxpayer bailout in a sense, are you like for it or against it? Like, what do you think about that?
I think what's interesting is CMHC was initially created to help people coming back from the war to get homes, and then then they switched their mantra to basically to create affordable housing for Canadians. And then over the last 20 years, 15 years, what they've actually turned into is basically like this machine that basically just securitizes all these mortgages. And so they've basically just created this like financial machine where they've securitized all these mortgages and like taken all the risk off the banks and allowed like this just crazy lending to go on.
Is there any justification for that?
In 2007 and into 2008, CMHC was doing 0% down, 40-year amortizations.
Wow.
Fully insured.
Yeah.
So like that's not prudent. Like that, like you shouldn't have people like in the housing market with 0% down. Like you're going to be driving prices up by doing that.
Right.
So
what's your opinion then of like, say, because you probably follow this stuff a lot more than I do. Actually, I can guarantee that you do. What's your opinion of like like the policymakers and like are and why would they say support like the banks over the taxpayer, and is there any justification for that, or is it because of like relationships and like corruption, or is it like they need to do it because that's how the economy works? Like what's going on there?
I think to an extent they need to do it. Like obviously you can't let the system collapse.
Yeah.
But there's kind of a fine line. I think a lot of it comes down to like governments trying to win votes, trying to stay in power, trying to get reelected, that they make these short-term trade-offs. So like in my opinion, like what happened sort of 08, 09 is like you should have let Canadian households basically pay down their debts. Like what happened in the United States is their household indebtedness dropped because what happens is they started paying off a lot of their debts. They allow people to basically go bankrupt, etc. Like it's kind of a natural process. It's like a cleansing of the system. It's like a cleansing of bad debts. So Canadian, like the government should have allowed that, but they intervened. I think they probably middled too much into it. So that's kind of my stance on it. Like now what I see is interesting is from CMHC is like I really like the new guy they brought in, Evan Siddall, because I think he was actually brought in. He knows, he very like if you listen to his talks, he knows what's going on, and his whole mantra has been to basically slow down lending and get this thing back under control. And so I really like that perspective because I think he understands like the risks that have been created.
Right.
And so now he's basically been trying to de-risk. And so CMHC has really slowed the number of mortgages that they insure every year. It's dropped like, I don't know the percentage, but it's dropped a tremendous amount.
Okay. Interesting. I'm trying to think about where we could go from this, but we've covered quite a lot of ground, and I'm definitely not well versed in this, so I'm glad that you helped me along with this interview. So thank you for that. Is there any sort of closing thoughts that you'd like to leave people with for now? Because I'd like to have you back on in 6 months, and we could do another update about where things are at. So any closing remarks? What should people do? What should people do, Steve?
I mean, the crystal ball.
Yeah.
I'm just a huge proponent of ultimately self-improvement, as we talked about.
So investing in yourself.
Yeah. But I think like one of the big things and like push behind my channel is like financial education, because I feel like nobody teaches that in school.
Nobody knows anything about that.
I wouldn't say I was like.
What are the big like keystone pieces of advice you would give to people in that realm? Like things that like the big things that they cannot ignore.
I don't know. I feel like I'd try to have like some sort of grasp, some like don't even have a whole understanding, but some grasp of sort of how the economy works and like, how like especially if you're running like a business, right? Like you're so like if you're running a business, like you're watching your balance sheet, but then like when you get home, you're not watching like your own household spending, or like okay, like what's happening if you have like a general understanding of where we are sort of in this economic cycle. So most of the hedge fund guys, like most of the well-respected guys, they'll say, we can't predict it, but like we feel we're kind of in the 8th inning of this expansion, and it's likely
it's sort likely of that sixth sense coming in, and they're intuitively seeing all these things come together, and they're like, this is what we think.
Yeah, they're like basically saying like we think it's kind of the 8th inning. Don't panic, but now is the time to be positioning. So again, like maybe like the advice I give to people is like, if you feel like we're in the 8th inning, maybe just start positioning for that, where it's like, hey, if I'm running a business, like just start thinking ahead of like
don't necessarily go and spend all your money right now.
Yeah, maybe don't go and get like a brand new Porsche. Maybe like have some like liquid cash.
Are you telling people should live within their means?
Yeah,
that's crazy talk.
I know,
man.
It's so boring, right?
Yeah,
I know, but I think that's the biggest thing is just. It's just because very few people have like the powder dry, I think, when it comes. But like I think as a business owner or whatever, even just someone that works 9 to 5, if you can be sort of like one step ahead of the game and just at least like you don't have to forecast, but at least sort of anticipate where we are.
Right. So have an awareness of what's going on.
Just have an awareness.
You're not getting blindsided when something happens.
Well, that's the thing. Like I don't know. To me, it was like everybody in like. You always like, go back and like read and like like the news. Like if you go back and look at the news, like they say, 2008, like nobody saw it coming. was like, really?
I didn't see it coming. That's for damn.
No, I know, but then you go back and like, whoa, like how
did we miss it?
Yeah, but like but then like you like, well, how come all these people, like not all these people, but like a ton of these smart guys, how come they made like hundreds of millions of dollars? Like if you watch like The Big Short,
right? That's a good one.
Like how did these guys know? Like clearly this wasn't like an event that like was like totally off the radar. Clearly people knew that there was like some underlying like disease growing.
Yeah.
And it was like, it actually was very obvious to people that I think were like,
who were paying attention.
There
was a really good guy who I listened to. Some people don't like him, but I think he's got some interesting viewpoints on things. Peter Schiff, have you heard of him?
Yeah. He's very interesting. He's I don't know. He's a bit like me. He's a little bit pessimistic.
Yeah.
Sometimes too pessimistic.
He's all about gold.
Yeah. Well, again, it's kind of like the thing, right? It's like we're talking about like realtors and real estate. Like he sells gold.
Right.
So it's kind of like, fuck, you can't keep like pumping your own book.
He has a credit card made of gold, and I was like, I want a credit card made of gold.
Yeah, well, he runs like Shift. I think like Shift Gold. Yeah,
right.
But anyways, he sells gold. Like I agree with a lot of what he says, but it also
like he has an agenda.
He's too like pumping gold.
Who are some like your top resources that you could send people to, people that you listen to?
Well, that Macro Voices podcast. If they want to understand like housing. Would be Professor Steve Keen. If you just go on YouTube and Google,
is he local?
No, he's where's he from? He lives in the UK, but he's from Australia.
Okay.
But he basically like he predicted a lot of what happened in 2008, but he also he basically like in plain English explains like how housing markets work and like the relationship between like mortgage credit growth and how that impacts prices. So if you want to understand like housing, Professor Steve Keen and debt, he talks a lot about debt. So he really understands how that all works. Ray Dalio,
right,
who's one of the largest hedge funds.
You gave away a copy of his book recently, didn't you?
It was a different book. That was Howard Marks is a good resource. If they want a free book, Howard Marks.
Right.
It's called Mastering the Market Cycle.
Right.
And so that's really about market cycles. And then Dalio has a free book. If you Google it, it's called, if you Google Ray Dalio Debt Crises, his book will come up. It's a free PDF. It's like 400 pages, but if you just read the first 50, that's all you need to read.
What do you think about Grant Cardone? Do you know who Grant Cardone is?
Yeah.
What do you think about him?
I actually used to like follow his stuff.
Yeah.
And I was kind of like, yeah, like let's get it. And now it's like too much. It's
In
like,
what sense?
I find that he's too. First of all, I feel like he's too money driven.
Yeah, well, he's definitely that.
Like I'm definitely like I'm motivated. Like I am like motivated partly by money for sure.
Don't you think that there's something to the idea that you have to be okay with wanting it before you're gonna get it? You know what I mean? Like if you're all against money, then you're never gonna. Bring it into your
I agree.
life,
like I'm definitely for that. Like I'm definitely like okay. Like I work hard because like I want to have like financial freedom and etc. And like. You know, I feel like the more wealth that I create, like the more value that I create means the more wealth that I'm probably going to create, which means I can ultimately help spread that around to people. So I agree with that, but he's just like, he's too like, I don't know. For me, I've just found like, especially over the last like 6 months, he's just too like, he's too flashy. Like,
yeah, well, it's private jet and all.
Yeah. He's just like, he's too in my face. Like I'm more of a guy where like, just
maybe Americans like that more.
Yeah, I don't know. Like I just need to get like I don't know. I like to me I more admire like the billionaires like when Warren Buffett drives like the same truck or he lives in the same house for the last 40 years.
Right.
Like to me,
like
I'm like
he's humble yet he's like ridiculously wealthy.
He's insanely wealthy, and he just like he barely shows it, but I'm sure he donates like crazy.
Well, Grant Cardone has this whole idea, which I was just curious on your take on it. Really, is about like he says like don't own your home where you live, rent where you live, and then go buy real estate in other places. Mm-hmm. I mean, does that even work in a place like Vancouver? Like,
I actually think that makes probably the most sense in Vancouver. To
really.
Be honest.
Really? You think you're
that's super.
So the Grant Cardone strategy of like renting here, taking your money and buying somewhere else that has much less expensive real estate, and then renting out, turning that into your asset. Like you subscribe to that to some extent?
Truthfully, I think if someone actually wants to build like wealth, like or at least start building wealth, and they can't afford to get into Vancouver's market because like you need a down payment of like at least like $100,000.
Right.
Like that's pretty hard for most people to save.
Yeah.
But like you can buy some like properties that actually cash flow, and you can get into the market for like dirt cheap in like other parts of Canada.
Where? And like, yeah, so they actually will have a positive cash flow, eh?
Yeah, like
what are some places that can do that?
I mean, like up until recently, like Prince George was actually very good. Like you can buy a house for like $275, and you'll probably get about $2,000 a month in rent.
So that would definitely cover the.
Yeah, it would definitely like cover and then some, but like, and that's
so it's like, positive cash flow, like not a lot.
Positive cash flow. I mean, just like naming markets, right? Like, I mean,
what about across Canada? Like, what like is there
Moncton, New Brunswick.
Okay,
like
places like that. Like I've heard like Las Vegas, you can buy like a condo for like $125,000 and like Airbnb it out, and like you could get some pretty positive cash flow that way.
There's so many places that you can actually cash. Like Vancouver, like truthfully, like Vancouver is not a cash flow play. You can't cash flow here unless you put down like 30.
You have to have a lot of money.
You have to put down about 30%, 35% on a typical condo to cash flow. And like I mean, again, how many people are gonna be able to save like a 35% down payment?
Not many.
Especially like okay, like even on a house on the east side is gonna cost you like 1.4.
Yeah.
Like you're only gonna be able to rent that for like $3,500.
Yeah. So it doesn't work.
Never work. So it's an appreciation play.
That's what it is.
And it'll probably always be that way
in Vancouver.
Yeah.
But so the move could be like, so Grant Cardone could be right about this one.
Yeah.
He's like, rent here and then go put your money somewhere else where you can actually get some positive cash flow coming in.
Yeah.
And it's something that I literally have been thinking about that for a while. I'm like, well, maybe that is the move.
It's not, it's not bad worth considering. It's like, I think that most people though, that I interact with on a day to day is like, they have like, a family, like the wife and kids, and like they just want the family house. Like they're not investors. They just want to have a family to raise.
That's the thing.
They want to be able to paint their walls, do their kitchen. Yeah. So they're not really looking at it from like a numbers perspective per se.
So they're buying because they actually want to live in the house.
Yeah. They want to live here in Vancouver for 20 years. They want to raise their family and they want to have their own house. So they buy it.
Right.
As opposed to like renting. Cause like, you can get kicked out tomorrow.
Yeah. Renting's oh man. Like, so I'm renting right now because, my place is being finished on the North Shore. But man, like when we were looking for places to rent, like it would be like, I don't know what it was. There'd be like 10 people lined up to look at one place, and it felt like just a free for all to find a place to live when you're renting. Like
that definitely pushed people into the market. Like I have clients myself that were like, I don't want to go through this stress. Like I just went through it. I got kicked out.
Right.
I just need to get in. Like even, you know what I mean? Even though this market's crazy, because I don't want to deal with the renting. And so I get that. And like that also created this, now we're starting to see the rental market slow down a bit.
Okay. So that's easing.
Like it's still very, very hot. Don't get me wrong, but it's definitely eased. And so that will obviously take some of the pressure off people as well.
All right. Cool.
Yeah.
Any final thoughts?
No, this has been good. I'd love to do it again.
Okay. Yeah, I'd love to have you back. That was great, man. Where can people find you?
Most active on Twitter, if anyone's still on there. It's just at Steve Saretsky.
Can't do it. I just followed you on Instagram, by the way.
Yeah. Oh, nice. I'll give you the follow back.
Nice.
Yeah, I don't really do much on Instagram, so I'd probably say don't follow me on Instagram, other than you, Andy.
Yeah.
You can get, if you go to my website, vancitycondoguide.com, again, terrible domain.
And then your YouTube channel.
Yeah, YouTube channel. But with my website, if you actually want like an in-depth sort of analysis, you don't want to watch my videos and read all my stuff.
Oh, you have the mailing list too.
I just have a once a month 15-page report on the state of the Vancouver market.
Nice.
I'll give you all the data, charts, everything that I'm looking at. So it's like a really good overview, and it'll probably take you 15 minutes to read.
Good job, man.
Yeah.
Way to put out the resources for people. Excellent, man. Thanks so much for coming on.
Thanks for
really enjoyed the conversation. And if you got value out of this podcast, you can support the podcast by just liking, sharing. Like all that stuff is valuable. So leaving a review and rating on iTunes, YouTube, and Stitcher is always very helpful as well. Again, thank you to everyone who tuned in. We really appreciate you and supporting everything that we do and all of our little ecosystems, from Man Talks to the podcast to Float House. And of course, if you want to give floating a try, you can use the promo code Vancouver Real. That'll get you 20% off a single float. And I didn't mention in anything, but I do have my own coaching and consulting practice as well at andysarempa.com, and I'm working with people now who, generally for entrepreneurship and in personal development space as well. So you can check that out. So thank you for tuning in, and until next time, to whatever is.